everyone. How are you? This is Miss Renee, and I am super excited to have you here to talk about something that is very important to the notary community, right? So, with that being said, I just wanted to really touch some of the important things that are very much so important to myself, to our community, and to any employee. You know what I'm saying? That works in your business. And so, as a self employed person, there's so many moving pieces. We are our own accountant, we are our own bookkeeper, we are the label workers, we are a lot of different things. And one of the things is, I want to make sure that you understand that you're not alone. And I'm going to continue every week to share some great tips to really make sure that everything is good to go. So, hi, I wanted to introduce you to a woman, okay, that knows a lot about self employment tax. She knows a lot. She has allowed a lot of different $1 million that she has helped her client, do taxation with. So I'm going to let her speak to herself and just talk to us who she is.
Hey everybody, how's everybody doing this evening? So I wanted to tell you a little bit about my background, 20 years in the tax industry. Got into the industry because I've always loved math, loved numbers. So it just made sense to go into accounting. Okay, began doing stuff for family and friends, and it just exploded from there. Became self-employed. It's been like 15 years now. Wouldn't trade it for nothing in the world. Okay, and in fact, it's good we're touching on this topic because back when I was having a lot of clients come to my apartment, my kids were my employees, so they used to do little things for me, greeting the guests, serving little light refreshments, handing copies, all kind of stuff, little filing. So that's the beauty of this strategy. This is definitely a tax strategy which can cut down on some of your tax liability.
So,
Okay.
what is
So
your name?
my name, gosh, I just was diving right in. I'm so excited
I'm going
because I
straight
just
into
get
it.
excited trying to help people save money. I'm Ktash Hardge from New York. The K in my name is silent. Okay. I'm in New York, but I service clients all over the United States. Okay.
Excellent, excellent,
Yes, yes,
excellent.
yes.
So New York, y'all hear her accent, okay? I'm from St. Louis, but I don't got a New York accent. That's one of the things that I
Wow.
gotta do.
Okay.
But yeah, absolutely. So tell us a little bit, like you're self-employed. How did that start? Like, did you ever work at corporate, and why did you become a self-employed?
I did. My background was actually in legal. I used to be a real estate agent. And it's funny that I'm now speaking to notaries. My mom is a notary. I was going to go into being a notary at once. And I've always found it a very interesting industry, especially like the loan signing agent, because it correlates to real estate and everything. So, yes. I'm familiar with all of that.
Oh, wow. Great introduction. So she's connected to us one way or another, you guys. And so that's nothing but amazing. So I think everybody's just been asking this question. Why is it so important? Why is it so important to have kids and write them off? Have kids go to work? Like, what is the kind of caveat behind that?
Okay, so let's just touch upon really quick. We all know kids are expensive, right? So we paying for some of us are paying for private education, clothes, social stuff, extracurricular activities. It's money you're gonna spend anyway. But the key to it is spending it in a smart way. So when you pay them as your employee in your business, you get to write it off as a deduction. They don't have to file a return on it. Okay, the key thing is keeping it. Yep, they don't have to file a return on it. But the key thing is keeping it under the threshold. So, like every year, when you hear that term come out, standard deduction, that's the key number. So I think right now it's sitting at like 12,400, something like that. If you were to pay them that, they don't have to file. You get a whole $12,000 write off. You got 2 kids, 3 kids. That's, adding up. And especially if you're a high income earner, that's the key. High income earner. I'm not going to necessarily say it's a great strategy if you're in a lower income, because sometimes certain credits that you're eligible for, you can kind of kick yourself out of those if you reduce your taxable income too low.
So let's kind of, if you give us like a huge like bracket, more so like range, what is like considered the range that maybe you should consult a tax preparer, an expert on this, and like maybe that's not the idea to do. So what would be the range? Like because notaries, like on average, we make $5,000 a month, right? And max, we make $10,000 a month, right? As loan signing agents, right? That's what our kind of average is, five, and then anywhere from 5 to 10. And I always tell them if they're 10,000, go see an accountant, okay?
That's
But
right.
what would be the range that they kind of really have to check in and be like, okay, maybe I'm not going to do this.
Yeah, so I would say if you're definitely over six figures, even if you're under six figures, you could definitely use a strategist because everyone has different goals. Some people are not really always looking to cut the taxes because if you're trying to get funding, if you're interested in other things, trying to get a mortgage, trying to just do things that you need to show profitability, maybe these strategies aren't really for you. But if you're someone who's like overpaying them taxes, you definitely should work with a strategist if you're over six figures, because if you're dealing with a hefty tax bill, this is just one of the things by default. I think it just makes sense. You're teaching your kids entrepreneurship, opportunities for entrepreneurship, great work ethic. And like I said, it's money you were spending anyway. And the key thing is you don't have to actually hand them the money, like you get to control it. The key
Mm.
ages is between like 7 and 17. Okay, so you can control the money. You don't got to really hand it to them.
Oh, okay.
Okay.
Okay. No, that's definitely. So we have gym number one, which is your child does not have to pay money if you pay them less than about 12,400, which is whatever that standard is for that year. So if you're
That's
watching this in, the previous time, 2023, 2024, whatever, right now in 2021, filing taxes is about 12,400. Okay. And how can you verify that? Look on a 1040 right there
that's
on, well,
right.
on the second page of this 1040. When it comes to standard deduction for just an individual, it'll tell you on the right hand side on the sidebar. Okay.
Absolutely.
And I can bring that up too. But with that being said, that is kind of like one of the hints. But you also brought in something else, right? What was gym number two? You said you can control the money.
Yes. Yes, 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 absolutely. Like I said, if you're dealing with private school tuition, childcare, like all kind of stuff, clothing, anything, recreational activities, these things become expensive. So you pay your kid, you hire your kid, you pay your kid, and then you're controlling the money to pay for their expenses and you're getting it as a tax deduction. It's all legal, all legal. And then when we sit and think, some people may say, well, what can my child do for me in my business? A lot. Like I said, I named a few things my kids used to do for me. They can do clerical stuff. They can maybe do some social media management. Just depends on age appropriate stuff. They can even clean your home office, like whatever it is, I'm sure you can find something to legitimately say, this is what I was paying them, and it's all good.
No, absolutely. I think that is a really, really good fact that you can control the money to pay for your child expenses, right? So that's one of the purpose of that. So I guess that's really, really great gems that we kind of started off. So if they are really kind of jumping on right now, what is a full summary? What you would say overall?
So the full summary, and before I give the full summary, I'm gonna give a bonus. I just mentioned that 12-4, but you can even add a little bit more because one little strategy, I'm giving a real secret here. Set your kids up with a Roth IRA. There's no age
Oh,
limit.
she hit it on the nail, baby. Okay,
Set your kids
right,
up
let
with
me
a
be
Roth
quiet. Let
IRA,
me be
no
quiet.
age limit. And I think right now that amount is like 6K, right? 6,000. So you can dump it. They're your employee. You can dump 6K in that Roth IRA for them, another tax deduction. So you're really getting like 18,000 as a write-off. Okay. So in summary, what I was saying is great strategy, hire your kids. It just makes sense. You're spending money for them. They're expensive. You're spending money anyway. And you're getting an opportunity to teach them about entrepreneurship, teach them about work ethic, great work ethics. and you're saving money if you're overpaying them taxes. Oh, I can't hear you.
Wow, wow, wow. Let's talk about that. So I think you kind of gave a huge gem number 3, but let's kind of dive a little bit deeper. We had someone on a couple weeks ago that talked about deferred tax to wealth management. So it told us a little bit about all the different like Roth IRAs, life insurance, and things like that. So now you're really tying it together. Okay. So one of the things that you're tying together, you're saying, okay, so I can pay my child up to $12,400 in 2021, right?
Mm-hmm.
And then I can control the money. And if I don't necessarily have to give, because come on, I think last time I read it was like cost like $20,000 just to have a child. You know,
Right.
that's just like halfway through, right? Renee
Absolutely.
doesn't have kids, but I did raise a few. Okay. So with that being said, I say that to say now I can control the money because I know that school year is coming up, August, right? Summer
That's
school,
right.
tutoring, different things, right? And so you're saying I can control the money for those specific expenses, even if I'm fancy and I put them in private school, right?
That's right.
And on top of that, I can control the money. But then you said dump it into a Roth IRA?
An additional 6,000. That's right. Whatever, we always got to pay attention to them thresholds, right? Every year, the IRS announces the maximum contribution. So yes, when they announce those for the Roth IRA, you as their employer are entitled to dump money in there and increase that write-off. Absolutely. All legal, all legal. Wealth strategies, wealth strategies.
Oh, wow. I love that. She said wealth strategy, wealth strategy. Okay. So, how do I, like, what if I don't have an IRA? Like, I know this is a
Um,
bit off topic, but like, what would be the best thing like right now? I know it's like towards the end of the year and I haven't really hired my child, and I may want to do it like now, right?
Yes, absolutely. Now, I believe you have until a few months past the new year. I think we get a few extra months. So sometimes, if you don't get to do them right now before the year ends, you get a little bit of extra time if you don't have a current account opened up. And one thing I want to mention, because a lot of people get this term confused, they hear the term kiddie tax, right? And have you ever heard that term,
Yes,
kiddie
ma'am.
tax? So some
Explain it to the audience. Explain it.
yes, some people get it confused because they think kiddie tax, like what we're talking about, hiring your kid. No, kiddie tax it involves something for unearned income, which is like interest. Sometimes you have bank accounts for your kids, you have the Roth IRAs, they may be getting interest. That's where that kiddie tax come in at. Kiddie tax has nothing to do with what we're talking about, hiring your kid. Two totally separate things. So
Okay.
don't misconstrue the terms.
Okay. So I just wanted to talk about prior. You just went over how to open up a Roth IRA. You're going to go over that a little bit. But prior to that, you're saying kiddie tax. I don't think everybody understood what you said. Okay. So let's
Okay.
break it down. Look, I know,
Yes.
right? Other people may know. But
Okay.
let's break that down, kiddie tax.
Okay. So we have earned income, which is what we pay them. They're earning that by working for you. And then we have unearned income. When your kids are receiving interest from accounts that you've opened for them, bank accounts, savings accounts, Roth IRA investment accounts, that's unearned. That's where the kiddie tax applies. Anything that's unearned is where the kiddie tax applies. It does not apply to money they're being paid by you, earned income. I know it's confusing, but that's the best way I could, break it down. Earned versus
Okay.
unearned.
So they know about that because I talk a little bit about ordinary income versus earned income, passive income and stuff.
That's
So
right.
they can go a little bit and Google that. But based off of that, like for example, we talk about high yield, savings account, right?
That's
That's
right.
unearned income, right? Because you didn't earn it, right? But
Right.
you put your money in that account, right? And it's saving, it's compound interest. So if you're
Absolutely.
creating compound interest, that's earned income. So you're
Mhm.
like, hold on, I thought I was here for how to hire my child. How the heck we get on this, Miss Renee? Miss Renee like to go on a tangent. No, this all plays a part, you guys.
That's right.
So what we're talking about hiring your kid, right? up to where they don't have to pay, right, the taxes on the money that you give them to that amount, which is $12,400. Then we're diving a little bit deeper and giving you a secret bonus saying, open up an IRA.
That's
Open up a
right.
Roth IRA for them. But she's also going a little bit deeper to tell you where you don't get confused and someone saying, you can't do it, that's kiddie tax and da 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 da. She's saying this has nothing to do with kiddie tax on hiring your child and not paying taxes on the money that you paid your child, right? So there's a difference between earned income and unearned income.
That's right. Absolutely. Perfectly well said. Perfectly well said. Now, another thing I see and have heard people get confused with, they say, well, can I just 1099 my kid, or do I have to issue a W-2? I want to mention that too. How your business is structured plays a key role in that. When you're a sole proprietor, when you're an LLC, when you're a partnership from mom and dad are the partners, you do not have to issue any W-2, not necessary. But if you have a C corporation, or if your LLC is being taxed as an S corp or a C corp, then you do have to issue a W-2. But it's still all good, because guess what? When you pay them that 12.4 whatever, when you file their return by the standard deduction, they're still going to be zeroed out of a tax liability anyway. Now, you will have employer taxes on that side. That's the other thing I meant to say. For those business structures, sole proprietorship, LLC, partnership from mom and dad, no employer taxes are required. But C Corp, and if your LLC is taxed like a C Corp or an S Corp, yes, you will have to pay like Social Security tax, Medicare, and things like that. But those are all deductions for you. And again, they're going to be zeroed out. And guess what? You can still claim them as a dependent on your return. So you're getting a double bonus.
Wow, this is nothing but amazing. I remember not too long ago, we had a really awesome conversation with business structure, right? We had attorney Anderson come in and really talk about like your business structure as a notary, right? And so having that and exploring into that, she actually went over what is the difference between DBA, what is the difference between a S corporation, what is the difference between a C corporation, and what is S corporation? Because some people think that a S corporation is an entity. It's not an entity, it's a tax status, right?
That's
That
right.
you can elect into, you guys.
So they're a little bit.
Yeah, so you can elect into that. So I'll drop the link into the actual Facebook group to really have people redirect to this, because this is very important for people to understand that the myth. Like, so some people like, well, she just said that we don't have to pay a debt. No, she didn't. She just said we don't have to do. No, she didn't. She said, please understand the structure that you currently have and what is applicable to you.
That's
So
right.
in terms, she's pretty much saying, once again, she's saying, if you are LLC and you just took what the IRS defaulted to you, which is a sole proprietorship, right?
That's right.
From a Schedule C, then that's just, you don't have to, right? But she's also saying this. Hold on, you guys. She said, if you are an S corporation, most of these notaries are not an S corporation, but they're learning more about electing into a S corporation, being a LLC.
Okay.
So I just put that. They're learning that. So they're learning.
Good.
Once they get to a net income of it,
That's right.
maybe I should tap into, a S corporation, or maybe I should tap into, that, right? And not really doing a C corporation, right? So my company, I'm a signing service. I am a C corporation, right?
Okay.
So with that being said, as a C corporation, you can still elect as a tax
True.
status as that. So I'm just letting people know that once you go big and you dream big, right, you can do big things and know some of the information. So the whole point of this is just to really educate our community of notaries, of not just passing along your taxes to everyone. Right?
That's right.
My accountant is going to do it, or my CPA is going to do it, or my tax strategy is going to do it, or my tax preparer. Yeah, but I promise you, you're not having these conversations with them because you are the owner of your company.
That's
So
right.
as the owner of your company, it's super important for you to know what's going on. The review process, right? They do the taxes. There's a time before they press that button to e-record or put it in the mail that you should be reviewing. So now the question is, what type of forms should they be looking at? What type of forms should they review to make sure that this is going?
So definitely familiarize yourself with, as you mentioned, Schedule C. If they're not, it depending on how they're structured. Most of them, as you mentioned, probably are not. So they're primarily filing Schedule Cs, which hint, hint, they're like highly targeted for audited. I'm just dropping gems out. Okay. So sometimes you may want to strongly consider converting even for that purpose. But back to the topic at hand. So Schedule C is crucial. I actually have a course on Schedule C, which I think you'll mention later. But it teaches you all about what you should be looking for, dropping a lot of wealth, not a lot of jewels and gems that you're probably not going to learn elsewhere. Not all preparers are prepared the same, and not everybody is well equipped, which is why you have to equip yourself with the knowledge, because I've had people come running to me from situations their preparers, CPAs, enrolled agents, and everything else got them into just because the professional was not well versed on all of these types of topics.
Wow. Say that one more time. I think they needed to know that.
Yeah, not all tax professionals are created the same. And I'm not a CPA. You know, I let everyone know up front. They're like, I don't care, because I'm like, what's the point? The title is not the thing that's going to get you the result. You know, my background and my clientele and what I've achieved for my clients speaks for itself. So if the person you're going to can't achieve the result you're looking for, what's the purpose of the title? Doesn't matter. You know what I mean? It doesn't matter. So not all of them are created the same. You should definitely be working with someone who's familiar with your industry, who's familiar with small business taxes, who's familiar with wealth strategies that are going to work for your unique situation. That's what I pride myself on, because like I said in the beginning, it's not always about cutting, because everyone has different goals. Everyone's trying to do different things. So if sometimes you may need to appear as a profitable business, but you need to work with someone who understands how to reach the goals you're looking for. That's super crucial.
Okay. So it's very important for you guys to go into a Schedule C, just to study. I have shared in some of my previous videos, it's important for you to know certain things, but let's dive a little bit deeper if you don't mind. A Schedule C, where will they be able to look? So if you did their taxes and they wanted to make sure that they opt into the part of paying their child, where would they see it on their Schedule C when they're
So
doing?
on the Schedule C, you're going to look for wage. That I believe so Schedule C kind of has two columns of expenses, and then it's going to be in the lower right. I want to say just look for wage, and you should see a number there if you've discussed with them that you've hired your child for tax purposes, whatever, you know. So yes, look for that. Yes, yes, yes. Pull it up. What are we online? I want to say, yes, there we go. That's where you should be looking. And that's how you'll know if they used that strategy or not.
Okay, excellent, excellent, excellent. For those of you that are pretty much looking at that, that's where you will see wages, right? For hiring your child. So we went over Schedule C's before. I just put into the actual live a link where you will be able to see her course and helping you understand what is a Schedule C for self-employment and how do you really prepare and understand what is going on. Remember, a Schedule C and profit and loss. So there is a charter of account when it comes to payroll that you're going to utilize as if you hire somebody into that. So that's one of the things that you'll end up seeing. So going back to the matter of that, that is such a pleasure for you to even just kind of show us, tell us, and everything like that. So I just wanted to bring up the second form real quick, if you don't mind, to really dive a little bit deeper and kind of show them just what we're talking about, because sometimes it's a really good visual for people to see exactly what are some of the things. So when we talk about what is the standard deduction of what you can hire your child, it's pretty much the standard deduction, which is on the sidebar on the left, that total amount.
That's right. That's a number you definitely want to pay attention to every year, because it does change. Even if it goes up by 400, 500, it changes every year. So that's a number you're always paying attention to.
Okay, excellent, excellent. So let's remove that. Perfect. So with that being said, what can you tap into this if you have 2 kids? Is the max still 12,400
for each kid? For each kid. Absolutely, absolutely. So if you have 2, we talking about a whole 24K. And again, if you're over 6 figures, 100 and something, to that alone is already giving you a huge write-off for money that you were going to spend anyway. You know, some people are giving their kids allowance and this and that to just do chores around the house. Make it make sense.
Excellent.
Strategizing your business.
That's so amazing. So would you advise, right, them to, I'm an LLC and I have 2 kids and I want to do this strategy, right? Benefit what I can to the end of the year or even start off fresh next year. What would necessarily you tell me, right? What necessarily would you tell me to do? Would you automatically say elect into the tax status as a C corporation before March the 15th? Or would you say, first year, let's just kind of see our net? What if I'm new notary, like totally new? I don't really know how much I'm going to make, right? And I'm just tapping into this. Like, what can you give us some milestones?
Yes, actually, that is where I would start. I would want to see what your finances are looking at in terms of your revenue, your expenses. And I would say it's usually good to start out as LLC, just as you are. The term escapes me right now, but disregarded entity. That's right.
Yes.
Disregarded entity. That's cool to start like that. I would say a good measuring stick is once you kind of find yourself hitting a net of like 40K or better, you may want to begin to explore being taxed as an S corp, making your LLC being taxed as an S corp. Now it does kind of involve a little bit of annoying stuff because you will now be responsible. You will be a W-2 employee to your own S corp, your kids, whatever. So, but it's just more, it's still a more savings because what you're paying on the end of self-employment tax versus what you're going to pay as a S corp, as an LLC, you will have payroll tax forms and things like that to file, but you'll see the cost savings in the dollar for dollar.
Oh, wow.
But I would say, 40K or more is when you're netting that. That's kind of like when you'd want to begin to think about converting.
Oh, wow. So I have this. Okay, I'm going to bring this up. Someone said, I have 8 kids. Is there a limit of the kids over 16 and 17? How many kids can I use at a time?
Listen, if your business permits what it is you need for them to do, maybe each of those 8 kids have different roles. That's the key thing right there. Even do little contracts to keep on file, because all of this is really about if you're ever audited. A lot of people, I know they're afraid of this, but as long as you're documenting, it's all good. So it's not really about, you can use all 8 kids. There's no limit if they all have roles and responsibilities with what they can do. And let's see, like not over. Okay. If they are over 16 and 17, over 18, I would say you may want to pay them. You may want to have them file a return in that case. Under 18, they don't, but if they're over 18, you probably need to have them file a return.
Okay. So I guess one of the questions that, some of the people may have is, okay, I do co-parenting. So on my taxes, I claim my kids for, I am the head of the household and I have a dependent. but the father actually is the one that has the home-based business. Can he hire his kids if he's not claiming his kids?
Yes, because you don't have to claim the kids just because you're paying your kid. I was just giving it as a bonus that it doesn't prevent you from claiming your kid. But absolutely, absolutely. If the dad is the one with the home-based business, he can, or self-employed business, he can claim the kid. I mean, not claim the kid. He can pay the kid all legal write-offs, but you still get to claim your kid on your taxes. Absolutely.
Right, because there are some families like that. And I want to make sure that everyone is listening to this, that it's not the fact of who actually writes the kid off, right? But it's where's the home-based business, right?
That's
And
right.
wherever the home-based business, then you can hire the kid.
Absolutely.
So, okay, there's some situations where you are the foster parent or the temporary guardian of that child, but it's not your biological child. Can I still hire that child that I?
Yeah, because you're still acting as parent, right? You're still acting as parent. So that's the whole key thing here. You're still acting as parent, sure. Rules
Excellent,
still apply, yes.
excellent, excellent, excellent. So, do you have anything else for us before we go into Q&A? Because my inbox is blowing up.
Let me see, because I have my notes, but there's so much of this stuff is off the top of my head. I didn't even really need the notes, but I talked about that. Let me just go really quick.
Show her
Okay.
some love in the chat, you guys, that you are loving this topic. This is something that's
Thank
not
you,
often
thank you.
utilized. And we just wanted to kind of bring, starting off December of year-end close to make sure that, now I can hire my child for December, even though I didn't do it. Yes, you can. Okay.
Absolutely, absolutely. So yeah, I believe I hit everything that I had made notes about. So we're good. I'm ready
Okay,
for Q&A.
excellent. We're going to dive a little bit deeper. So, one person said, what is an example of low income? So, previously in this conversation, you stated something about if it's low income, you're probably going to hinder yourself. So, let's think about it. What is considered low income to you? What would you gauge?
I would say, okay, we have some people who are on Schedule C. Maybe they make around 30 or 40,000, and how their deductions and everything works, they're eligible for some earned income credit. Now, so that's all good. And earned income credit is based off of, it's not just like a flat rate. You get this X amount of dollars. Depends on so many factors. Now, if you go throwing, let's say you're at 40,000, you have 2 kids. Now you're writing off 12 and 12, 24. 24 from 40, whatever. I'm not doing the math in my head, but it might kick you too low for earned income credit. Or even if you're at 30 and now you're trying to, it wouldn't make sense to write off 24 because it's only going to leave you with 6. And what kind of earned income credit are you even going to get with that? So that's what I mean when I say if you're in a low income, these strategies really probably wouldn't benefit you.
Okay, excellent. So, in that situation, you was able to really articulate that. Perfect, perfect, perfect. All right, let's see what we got cooked up. All right. So I have another one. So they said, how and where can I put these deductions when I'm filing? We went over that, right?
Yes.
So that's one of the things that we just, for those that coming in, that will be a Schedule C, depending on your business structure. So if you haven't watched the video already of business structure, go ahead and go into that. But if you are a single member entity with the IRS and you just as the default or your DBA is on your Schedule C on line 26. Okay.
Yes.
So what is the ages of your kids can be?
I would say safe ages. I say between like 7 and 17, because again, depending on what you're having them do, it needs to make sense. The IRS knows that you're not paying like your 5-year-old $12,000 a year to do X, Y, and Z. So like safe age zone, I would say from 7 to 17, because that's where we eliminate having to do Social Security tax, Medicare tax. Like it just goes out the window. Those are safe ages. Anything 18 and over, you probably are looking at those employer responsibilities. But again, it's still all good because it's still a deduction. They will need to file, but they're going to zero themselves out anyway of a liability due to the standard deduction.
No, I love that you said safe ages, right? But you can hire your kids lower than that age, because we have seen it on
True. I'm
Star
not going to say, yeah.
right.
I'm not
But
gonna
I
deny
love
that.
that you emphasize saying, hey, maybe think about this a little bit, because we can always get audited, right?
Right.
Schedule C's, we are really red flagged, right? So
Absolutely.
safe ages, I love that concept of what you said. So
Yeah.
safe ages is between 7 and 17.
17. Yeah.
Excellent, excellent, excellent.
Yeah.
And someone put 7 to 17. Excellent.
That's right. That's right.
Excellent. Okay, cool. We had one that says, wow, I never knew that. So much information, right? So definitely
Right.
they're loving that. Someone said, I'm definitely going. Are you taking on new clients?
I am. But I'm not gonna lie. I'm not even trying to toot my horn. I am in very high demand. Clients all across the United States, and I'm usually booked out months ahead. But
Okay.
it's still definitely in my link. When you put up my link, I have a form there for new clients to submit to request to become a client.
Okay, I'm putting it right here on the chat.
Good.
For everyone for us to bring up.
But
So
it's worth the wait. I hear everyone tells me you are worth the wait.
you are worth the wait. So
Yeah.
you guys, that is some information that I am dropping into the link. Okay, let's continue. We have ladies, this is great. A lot of gems. Someone said, I have 3 kids.
I know that's right. Them expensive.
They said apply to a 3-year-old. So this does apply to a 3-year-old, but we just went over safe ages, okay? But you can definitely do that because there's child star actors, right? So sometimes
Absolutely.
in the notary business, the only thing I can really think of is photos, like using them as your models for your images,
True.
photos,
That's
and
right.
things like that, where you're like, okay, you're a hardworking single mother, or you're hardworking mother that is married, and you're all about the family aspect, right? I know there are like influencers that always put their child into their photos and stuff
Absolutely.
like that. So those
For
are some of the
sure.
tips that you can definitely do. But are you paying them $12,400 at the end of the year? Right?
Right.
That's
Right.
the question, right?
Right.
So, and
And
are
you
you
can adjust those numbers, right? We don't have to take the full 12. You can scale it down. You paying a 3 or 4-year-old. Absolutely.
Absolutely. Okay, we have one right now. It says over the age where I can have to report and generate a 1099 for them.
That's why I was saying over 18 and up, because with that, you do get some bonuses here as well. So if you're going to 1099 your 18-year-old or up, that's fine. They will need to file their own return because that's now considered self-employment to them, right? But guess what? Since they're filing with a 1099, they're also entitled to deductions for certain things. You know, if they maybe you have them paying their own cell phone, or if they're some 18, 19-year-olds, 20-year-olds have their own car, and so now they're getting write-offs from what you paid them. Yes.
Excellent. So then we also have, if the child has been performing jobs, roles throughout the year, can I pay them once a year based on an hourly and job completed, since the child is not on W-2 employee?
Okay, let's see. If the child has been performing jobs roles throughout the year, can I pay them once a year? Yeah, sure. Absolutely. And it's good that you mentioned hours and things like that, because that was in my notes here. It's good to, just for documentation purposes, it's good to track the amount of hours they worked for you, the kind of roles they did. Absolutely. You could pay them once a year. And again, you don't have to issue that W-2. Don't complicate it. I don't want to complicate it. So
But
yeah.
I also recommend, what I don't think we touched on a lot is, go look at a job description, right?
Yes.
And make your own job description. So this is for internal records. Records are important, contractual. So you're like, okay, so what type of job descriptions are out there for hiring your child for that, right? And then you just have it in your files, just like how you store your commission, your welcome packet, all of these different things. You're just going to store in your tax file, right? So if that purpose does come, you get audited or anything like that, you already have it, and it says revised in the little header. It was revised in this year, right? So it's pretty much kind of like giving your child like, hey, welcome on board, right? Exactly. So it's that type of, so one of the things is, if you don't have one and you're already doing it, I highly recommend that you just have it internally. So
that's
you
right.
don't have to just, oh my God, the IRS is here and I just got to type up something.
Okay? Right.
That one. Okay.
Be prepared. Don't be scared.
I love it. Be prepared and don't be scared.
That's right. That's right.
Okay. I'm going to take that from you. I'm telling you this flavor, okay? All right. She said, someone said, this is amazing. Thank you both. Informational. They love it.
Wow.
They said, I miss a little bit of information. So can I hire my grandchild under 18 years old?
So that's a very good question. And I'm going to tell you to work around the loophole with that. Okay. Now, technically, because I like to talk on the record and off the record. So on the record, no, you can't hire your grandchildren. But here's what you can do. You can pay your adult child for whatever services the grandchildren did because that parent is like overseeing, they're like the manager of that child, your grandchild. So you can pay that adult parent, you can 1099 them, whatever, and they can use that money to pay the grandchild.
And put the money in the ROTH IRA.
Exactly. Still same strategies. And then your adult child who has the grandchild is still going to be entitled to business deductions, which one of the deductions is paying the kid out of that 1099. Still a write-off, right?
Yes, absolutely.
So it's a loophole to paying the grandchild.
Yeah. So the grandchild can be paid, but you're not going to get the huge tax deduction of what we're talking about.
Right.
But
under
he's getting
18.
paid. Mm-hmm. He's getting paid. Okay.
Yes.
Okay. But for that, yes, you would have to have a 1099. That doesn't mean that your business has to be a tax status of an S corporation in order for you to do that. You can just be what you are here. You just have to give them a 1099. Okay?
Right. Absolutely.
Your child. That's the loophole.
Absolutely.
On the record. Okay.
And if they're over 18, then yeah, you can 1099 your own grandchild, of course.
Okay. Excellent. So this being said, okay, so hold on. We didn't talk about this. So if you're taking care of your grandchild as the guardian, okay, and the mother is not really involved or the father's not involved of you raising your grandchild, yes, you can fully take the 12, 14. Okay.
Right.
Yeah. So if you are literally like in the foster, system, or you adopted or something like that, yes, you can. So it depends on the stipulation of what that guardianship is. Okay. Absolutely. But if you're saying that no, the mother's in alive, she's actually, he's staying over there all the time and X, Y, and Z. Yeah. Okay.
Yeah. Great question. Okay.
Does your child have to be have a bank account to show periodically deposit into their account?
Not necessarily. They should. It's good too, but not necessarily, because the whole thing is like we just talked about those internal records. It's more important for the internal records of how they were paid, how many hours, what type of task they did, more so than showing periodic deposits in a bank account. Yeah, that's kind of making it too complicated. It's more important for the internal records to be on point.
Yeah. So you can have an Excel sheet. Okay.
Absolutely.
As we know, Miss Renee love Excel. But like you said, you can make up your own payroll, on Word, Excel sheets, a lot of different things. So you can have an internal audit of your own paperwork, internal audit, just to make sure you have your debits and checks. So that's one of the things. Do. Someone said, I need you. Okay.
That's a feel so.
Someone said, how do you tie the Roth tax for the kids and anything to do with the insurance policy writer?
Okay, so I definitely don't like to speak about anything I'm not that familiar with. So I'm not going to touch upon the insurance policy part. I stay in my lane. But the Roth, I will say, like I mentioned, there's no age limit to open a Roth IRA. And with that Roth IRA, you can be directing that money into investments of your choice. Maybe you're teaching your kid and educating your kid about investments, so that Roth IRA can be working that money. And yeah, but the insurance policy writer, I'm not too familiar with that.
So we had an insurance expert on it, Mr. Wilson. So I recommend you can reach out to him in regards to that. But she's telling you, you can go set up a Roth IRA with your bank. Okay. So if you missed that video, it's called Deferred Tax for Notaries, Wealth Management. So then he's going to be the plug to make sure you put it all together. Right. But it is possible. It is legal. But when it comes to being online, we only talk about, our expertise. Okay.
Right.
So with that being said, we have her.
Yeah, that's probably right. Yes. Mm-hmm.
Yes, we have her link there. She said, I'm a dream catcher. I need your services.
What's a dream catcher?
Really great question.
And I wanted to throw in there that I'm noticing I'm gathering that some people are kind of doing their own tax or whatever, and that's fine. When they visit my link, there is another course I have there, how to file taxes as self-employed. And that's a really good course. And if you get both, I have discounts on the site for cross getting courses, but that one is good as well, because not only do I drop a whole bonus video with business tax deductions that you probably never even knew you could write off. That whole course on how to file taxes as self-employment, I go into a lot of deep level stuff, and I make it very easy to understand. That's one thing I must say is a perk for me. I hear that a lot. A lot of people tell me you make things sound in a way that I can understand it. And that's how my courses are. So even if people are out here doing their own taxes, or if you have someone filing for you, it's still good to educate yourself, because what I tell everyone is it's fine if you're using a professional, but if the professional doesn't know the right questions to ask you, or if you don't know what you should be sharing, you're going to get nowhere.
Say that again.
So still take my
I tell them all
course.
the time, especially with the notarial self-employment exemption for notaries. So there's only two people in the world can get self-employment exemption: ministers and notaries, because we're public servants. A lot of tax preparers, they overlooked it. They never studied it. They don't understand that ideal client is not a notary. So therefore they miss on that huge opportunity, because self-employment 15.3% is going to eat you up alive. Right. But through all of these different things that we're sharing on the marathon, Notary Tax Station Marathon, you're learning different ways of where to store the money instead of giving it to Uncle Sam. Okay.
That's right.
You hear what I'm saying? Instead of storing all the money, but you got to educate. You got to go through these videos. You got to study them, right? Like as you're going to school, right? To know exactly through that review process. Okay, I made 100,000, but I don't want to pay Uncle Sam all of it. So Miss Renee, what can I do? I can store my money here. I can open up this. I can pay my child. I can do tax deferment. I can open up an insurance plan, right? I can do so much, right? Home-based office, we just went over that last week, right? To make sure that everybody misconception of home-based office, red tag. So these are a lot of different things that we're just getting started, right? So we got several weeks to go. So that's my tangent, but I just put the link in the bio of her self-employment course too.
Okay.
So I'm going to put it on the group chat for the Notary Gyms too. So I just entered that into that. Okay, you guys. So I'm trying to get to everybody questions. My husband's get disability, and I have been doing a loan signing agent for 1 year. We have my grandson. I have no clue how to file taxes. What do I do? take her course.
Right. That was just what I was about
To
to
get
say.
educated.
In
Just
all
to get
honesty, in all honesty, take the course. It's going to explain so much. In terms of your husband getting disability, that's not taxable income. So yeah, just your loan signing agent income is what's taxable. And if
And
you're
your grandson, and you take
right,
care of your grandson. So
yeah,
so this right here in the prices. So let's really talk about this. Currently, right now, her prices are so affordable. You guys,
absolutely.
if you click that link, you're gonna be like, what?
Yes, this is true.
No, you're gonna be like, what?
Absolutely.
I'm surprised. Go click that link, right? That I put in the chat. Because you're gonna be blown away. Like, hold on, what?
Yeah.
All right, excellent. All right, let's keep going. Okay, that works. I really use the tax bracket.
Wow.
Okay.
I really used it. Yeah, that tax break. Okay.
We know Excel. Yes.
Good.
Excel. They said thank you so much.
You're
We
welcome.
have the self-employment tax. If you go to this link right here, you'll be able to see the self-employed tax course. Okay, click the link. You'll be surprised of your life. It's like Black Friday sale, right? Or Cyber
Yeah, exactly. Exactly.
and that's all year, right?
Yeah.
So we have another question saying, my small business has a virtual address. Can it be considered a small base? Okay, so I'm going to tell that person, go watch the video that we have from the gentleman, Mr. Tyrone. Okay, he was able to go over all of that. So I'll put that link in the bio for those that want to look at the link for home-based offices. But with that being said, I think they showed you so much love. You did an excellent job, my love. It is 7 o'clock. We went for a good
Is
amount
it?
of time.
Wow.
New York time,
I get to
California
run in
still
my
4 o'clock.
mouth.
Absolutely. So I just want to say thank you so much for just coming in, showing us. You definitely killed it when it comes to that. I think that a lot of people are going to come to you. The wait will be amazing. And while they're waiting, they can get educated with these Black Friday sales that you still keep going on. Right?
Absolutely.
If y'all hear my comment, go click that link. Okay.
Yeah.
Also, just to let everyone know, this is nothing but amazing that she was able to come on here and just kind of educate us what is going on, how can we better prepare ourselves, and everything to that nature. A couple things that are also going on with myself. We have this upcoming January the 7th, Notary Business Taxation class to also prepare you on Notary Pacific, tax deduction, tax issues, and things like that from a notary perspective. So I'll drop that link there. It's a 2-day course. It is live. Not being it's going to be recorded for after, but it's a live course that you can engage with me and my counterpart when it comes to that. So we also have that going on. That will be that. I put the link in the bio. And then lastly, this Sunday, we will be doing 1231. What can I do now, right now, until 1221 tax strategist. And that's Sunday at 10 a.m. Pacific Standard Time, 1 p.m. Eastern Standard Time. And I'll drop that link into the actual bio too. Other than that, thank you. And what would be some last words? What would if someone could told you when you started about being a self-employed person, what would you take away on this?
When I first started, or
Yes.
I would say this is just the best route, guys, because we really get to live a tax deductible life. There's so many things that we get to convert. And I think that, I don't know, I know self-employment isn't for everyone, but it can be for everyone. And it can definitely bring you potential of unlimited income, opportunities for tax strategies, and wealth building. Yes.
Wow. So you had it, you guys. I really appreciate that. I am super excited to bring. So what do we have next week? Next week, we're going over, can I write off my car? Can I write off my mileage? Do I have to pick two different ways of like filing? Like, what is this? Do I keep all my receipts? What if I don't have my mileage? So we're going to talk about that next week. Week 4 on the Notary Tax Marathon. Have a great day and stay safe.
Bye bye, guys.